got something.
Club. This video is sponsored by Tradecraft. Create your tags, tag your trades, store your recordings, create screenshots, and look at your statistics. You have the ability to create statistics using several widgets. You're able to place them wherever you please, having a place where you can store all your playbook trades, and you can quickly flip through them, studying all your trades. Tradecraft is more than a journal. It is a tagging software that allows you to create the statistics you need, where you have the ability to filter your trades out on an extremely deep level, allowing you to figure out exactly where your edge might be. For more information, check out the link in the description of this video or visit tradecraft.club.
What's up, guys? It's fucking Hump Day episode 4, and I don't think there's any fucking questions. Oh, wait, there might be. I guess everybody got fucked up on Easter. So everybody's suffering brain damage. Anyways, I think in this episode we're going to go over why I don't use volume profile anymore. Just to start it off, I wanted to make a dedicated video about it, but you know what? Fuck that. So what we're going to do is go straight to the charts. There we go. It's working. So I've used volume profile for an extremely long time. Let me actually pull up my YouTube channel while I talk. So I've used volume profile for an extremely long time. Maybe since 2019. Yeah. Well, I don't know. When I first started trading on a depth of market, there was the profile would show up on the Jigsaw DOM. Learned a little bit about TPO, but leaning more heavily into it, it would have been like 2019, I would say. Let's look at my channel. You know what? Fuck that. Basically, I've made videos on it. So if you're familiar, the markets have changed since 2020. I think in 2020 we went through a market regime shift. Something is different. I have an older video called Auction Market Theory. It's like a red thumbnail way back. And back then, I felt like the high nodes were more respected. The low nodes would be more respected. Obviously, the order book was bigger. I have a video called How to Read a DOM, which is the most popular video I have. And in that video, you can see that the ES is physically, like, bigger. Like, well, shit, I'll just pull it up. How to Read a DOM. By yours truly. Okay, so let's actually look at this. That right there is what the fucking ES used to look like. Easy 18. Okay, I guess I was using profile in 2018, but either way, look at 627, 474, 486. You know, that's not. Here's what today. This is currently what we're sitting at right now. 10, 15, 20, 43. So that I think the market regime has shifted substantially. Since I started trading, it's not like that anymore. So therefore, I feel like a lot of shit that used to work doesn't really work as well anymore. The light looks like shit in here. I need to put more light on my face. Let's see if that helps. But anyways, market regime, I just think shifted. Like, high nodes used to pivot, low nodes used to pivot. Then they started double pivoting, and then it just got sloppier and sloppier to the point everything's just fucking chopping. I think we went through a renaissance after COVID because all the liquidity came out of the book. It never came back in. I still could never really find an explanation of where the fuck it went. I've asked other traders who have a lot more experience, and nobody seems to fucking know. There was a news article I read about where has all the liquidity gone some years ago. Basically, in this article, they talk about how market makers were not getting good enough rebates. The rebates were getting shittier for the market makers. Maybe a bunch of people got burned during COVID. Maybe the rebates weren't as good. The exchanges do favor the high frequency trading machines because they're their best client. They make up so much volume. They bring them so much money. They're going to favor them. But in the end, somebody is making markets. The book is thinned out. So I think a lot of volume profile techniques don't work like they once had. But I continue to sort of lean into it. Now, let's actually look at a chart. Let's look at today, for example. I used to use a lot of volume profile to where it was RTH session profile, which would be roughly here. So this is what you would call double distribution, right? Let's see. Let me put it right exactly at fucking 830, which would be right here. Let me put my finger on the fucking screen so I can kind of line it up. I think it's here. Oh, shit. Okay, this is good enough. This is what today's RTH session basically looked like. Can the people in the fucking Discord see this shit? Yeah, you can. So, double distribution, right? There was a range, and then they put in another range. This is on a 30-second, so pretty choppy, pretty noisy. Let me erase all my little lines so we can't see those. There it is. I mean, look at your point of control. Now, the point of control wasn't there at that time. This is also why I don't like volume profile. There's your low node. First and foremost, it's way up there. They never pulled back into that pocket and rotated it. I think it's like any other indicator. Sometimes it works, sometimes it doesn't. When did they put in the official VPOC? Right. I mean, right about there, really. Right about here. So you did get a clean pivot off of the point of control right there. Let's keep expanding it. Kind of didn't pivot off of it so cleanly there. And then right here, the POC moved. Right at this point. But at this point, enough volume came in to move the point of control down. Point of control moved again. And then it just kind of did whatever. What I don't like, and there's a day that happened recently. Let me pull up Paint. This is what I really don't like about profile. So you start getting a range, right? And that is a very model range. Most of the time when you have a volume profile, it is not a model range. Now, I know in hindsight this kind of looks like a model range, but if you really look at this and you zoom in, I mean, there's a shitload of fucking ranges all over the place, right? So you have, you have a range here. You got one here. They kind of did a little bit right in that section. Sort of a range there. This is what I don't like about these types of profiles or a volume profile is like the price action typically that's making up an RTH and ETH profile. It's very sloppy. The way this price action made this profile is not clean up down. And I know in hindsight it looks good, but if you really look at it, each of these dash lines are 5 points. I mean, you're talking 20 points on these little gyrations in here. So if you're like wrong, you're probably getting stopped out or don't have enough risk. Unless you're somebody who trades bigger pushes and you're trying to pick up 50 points or whatever the fuck. Which, I don't know. I have my opinions on that. I think scalping works. That's what's working with the prop traders like Chronic. By the way, he's doing pretty fucking good. Got another prop trader ready to start trading. He's doing good as well. They're both scalpers. I digress. So this, the way this profile, the way the price action goes into the profile is real sloppy. What you got to understand with a profile is the way the price action is moving is what ultimately you're trading. Price action matters the most. So I think profiles like this, oh, it's double distribution day. Okay, well, sure, but I mean, you're going to get fooled on some of these chops, right? I mean, look at this fucking thing. Look how it wicks up like 15 points, comes back in, and then it finally goes down. You know, so if you're trying to break out of this range or whatever, you're going to get slapped in the tip of your dick, and then it comes back down instantly, and then it goes back up and tests one more time, right? I mean, and it kind of goes through the point of control right here. It's real sloppy. Like the price action on profiles are sloppier these days than they were back in the fucking day when I showed you how thick the DOM used to be. 2018, right? So market is thinner. Trader, the same overall volume is coming in. So if you look at a volume histogram between now and 2018, the same daily volume is coming in roughly, give or take, right? And the book is thinner. So, you know, well, we were at like 10 lots today or some shit, 15, 16. When you look at, let me pull it up, this old ES DOM 300, 400, same overall volume coming in then as it does, well, now. And I'll pull this up again. Here's the DOM now, 10s, 15s, or what have you, right? Let's make that better quality for you guys. 5s, 30s. Same overall volume coming in. So what's happening is the traders are cutting and hiding their orders more. This is my fucking theory. I think, because I've kind of talked shit about Orderflow in 2 videos on my channel, pissed a bunch of people off. They didn't seem to get to the part at the end of the video where I said why Orderflow is useful. It has its place, but as far as like, oh, there's a large trader here, I'm just going to go fucking long because that guy's reloading. That doesn't mean shit. I think volume profile is kind of like Orderflow. When you first get into it, you get tunnel visioned and you're just staring at the profile, but you're not paying attention to the price action. Same thing with Orderflow. You're too zoomed in on the Orderflow when you're new, and you stop paying attention to everything else, and then it doesn't work as good. That's what I think about volume profile. I think some people put too much emphasis on it, and they're not really reading the price action, because not all volume profiles are created the same. They can look exactly the same, but they are not created the same. The price action could be doing drastically different things in that profile. Therefore, if you're just leaning on a profile and you're not really paying attention to the way that price action is moving, you're going to get fucking stopped out, or you're going to have problems. And what I think is going on, again, pivoting back to this, the order flow is so much thinner. Same overall volume is coming in. The traders are cutting their orders up. They're cutting their orders up. So what is that going to do? If they're cutting their orders up and feeding in little bits at a time, because the book is thin now and it's, you know, what's way thicker then, same daily volume, they're cutting their orders up. So what does that do? It makes everything choppier. I think order flow is no secret. Everybody could see it. If you read Flash Boys, I highly recommend it. It is a Royal Canadian bank trader who discovered high frequency trading because it was real hush hush at the time. And he realized he was getting front run in the order flow. And then in that book, he talks about how the order flow is an illusion. That was written in 2015. This guy figured out, what, almost 20 years ago at this point or some shit? 15 years ago? Or was that 10 years ago? Either way, the book was written in 2015. The book was written after the fact that he started finding this shit. So the order flow has been an illusion since then. And I think that traders are smarter traders, smarter players are starting to hide their shit. They cut it. They use order slicers. They're obviously reloading more. And then also there's something called market takers. There are people who get paid rebates to actually place market orders. I don't know what's going on in the ES. I don't know if you get paid rebates for taking orders. But that was something that was talked about in that book. So I think whoever's making most of the volume is becoming more and more aggressive at cutting the orders up and hiding what their intentions are. So just because you see somebody like reloading or there's 1,000 lot, that's like a moving average. Sometimes the fucking price will bounce off of that and go. Sometimes it doesn't go to it. Sometimes it'll bounce off of it and go right through it. I don't think using order flow to get into a trade is super reliable based off of what they're doing. I think it's more of a contextual piece. How hard is it for me to get filled? Is it reloading a lot? Is it thinner? Because the way the order flow is kind of coming in really dictates the skittishness and the movements in the market. Kind of like today had a more skittish feel to it. And also what's getting more and more challenging as the years go on is every day the price action is a little bit different than the prior day. Ever since this VIX 50 spike, every consecutive day has been a little different than the prior day. And then you'll have about 3 days or so where it's somewhat similar to the last day, and then something shifts and the patterns change and everything's different. So I think we're going through more and more aggressive regime shifts more frequently. So the market is just switching it up faster. Market, the order flow is getting hidden, shit like that. I don't think markets are really truly running off of fundamentals. I think it's about predatory. There are predatory algos. They trap in the ES. I mean, they do. You'll see it fucking rotate to the fucking tick. I'll show you. See, I go down my conspiracy theories now. So this is obviously, let's go to when the market was open back here. 1 second chart. You're going to see a lot of shit like this. Notice how, like, right up here, it kind of, like, rotates to the tick. Right here, rotating to the tick. Right here, rotating to the tick. This is about 3 seconds. The price is going up and down, rotating the tick. It's because they're reloading a lot. Rotating to the tick here, rotating to the tick here, rotating to the tick here, rotating to the tick, rotating to the tick, rotating to the tick. In my opinion, when you start to see a lot of rotating to the tick type of shit, it's more predatory. You're not getting slop. You're not getting a lot of fucking overlap. You're not getting the bars kind of top ticking, bottom ticking. It's like holding. There's this aggressive reloading to where not even a one lot can come in. I think, you know, with the dawn of, some of you are so new you didn't even fucking trade COVID or some shit, which blows my fucking mind. But some of you are coming in, you know, many years later. It was something. It was like the VIX 50 we recently experienced, but worse. Because we were hitting circuit breakers a lot. But then after COVID, you had the GameStop AMC debacle, where the fucking people were just. It went up for no reason, right? There was no fundamental reason for GameStop and AMC to fucking trade the way they did. It just became a giant casino. I think markets have strayed away from the fundamentals of what a company is worth, what their assets and debts are, and the whole Warren Buffett way of fucking thinking. You know what I'm saying? I don't think markets operate like that anymore. The people who make up most of the volume are the algorithms, the HFTs. They don't give a shit about the fundamentals. They just turn the fucking machine on, and it's all about extracting money. And I think the way shit is being done is it does prey on psychology of traders. The way it whips and rips back and forth, I'm sure most of you have gone tilt. You know, when you just start clicking the button and you're getting pissed off and it seems to keep fucking reversing on you every fucking time you click the fucking button. It just whips back. It's like, what the fuck? It's like it knows what you're doing. I think that the algorithms and shit understand trader psychology, and I think it operates in a way to prey on it. Because there's edge in that, in my opinion. So this is part of why I think volume profile doesn't work. I think we've gone through a renaissance, maybe even before I actually started trading, but after COVID, the liquidity disappeared, and I've seen things like the profile not work as good anymore. So coming back to the profile, this is what I don't. This is what I don't like about it. This profile is actually made on an ideal looking range. I mean, it goes up and it goes across. It goes all the way across. You know, shit like that. Like it has that up down look. Now look at this bell curve, this distribution curve. If we were to get rid of the price action, this curve looks like this curve. They look pretty similar. They're both curves, but the price action building this curve is not the same. Like I showed you earlier, there's a few ranges here, and it kind of just goes down a little bit, drifts up, kind of dicks around sideways, and then drifts back down. And it's a lot sloppier and grosser than the one up here. And that's the problem with bell curves. You could have multiple shapes. Let's do this. We have a bell curve here, right? And let's say you're like, all right, I'm going to fucking fade it. And this happened last week, and I was complaining about bell curves. I recorded it. I don't know where the recording is. It broke, but then it did this shit. So it broke, and then it extended the way the bell curve looked, and then it just made it taller. It added more ass to it or some shit like that. And then they fucking dicked around. So if you're playing breakouts or meaner versions in here, you're getting fucking clapped out in this section. And then you're like, oh, fuck. And by the time you figure it out, you know, if you're running bigger stops or whatever, you're getting stopped out 15, 20 points at a time or whatever. You keep getting in and out of it. It ain't fucking working. And then it does this bullshit. And then, you know, it might do this again. And then all of a sudden, this bell curve extends more, right? And it's like, well, fuck, are they going to break out or are they going to mean revert? And you're trying to play this curve and it's going to go all the way across or some shit, and it never fucking happens, right? You're getting fooled on all these pivots. So for me, for the longest time was like RTH, ETH profiles. There's too much noise in it. I think higher time frame patterns have too much noise. Let me see if anybody said anything. One person. When they made the claim about order flow being an illusion, being the available liquidity disappeared when they put their order in. They couldn't rely on what the order book was telling them. This was because they were being front-run by HFT firms that had faster access to the exchange, to the private. Well, you're absolutely right. It's still an illusion today, though, if you think about it. I mean, can you really rely on that big bid that's sitting there? You see 1,000 lot come in. Can you really lean on that? It could go right through the motherfucker and keep going. Or it could bounce on it. Or it could never fill it. Or it could bounce on it 4 ticks and then come right back in. I mean, fuck. Or it just disappears. You seen that shit, so, I mean, it's still illusionary in my opinion. I mean, now, going back to this profile, right? So what I started doing was I scalp. It's a better way to do it. I don't know why this won't go away. Give me a second. Technical difficulties. Remove the profile. Okay. So what I started doing for years was, it's like, okay, we have a giant profile here. And what we do know is price action is fractal, right? We know that price action is fractal. There's going to be a range and a range, a trend and a trend, shit like that as you go through the different time frames. So there's 2 distribution curves here. Well, I only really need to know about one of those. I don't need it. This is the thing where the profile is unreliable. It's blue up here. It's like the value zone is up there. No, the value zone is not up there. You know, the value zone should be right about where it is here. So I started cutting up my profiles for a long time. Right, that better reflects the value zone. 70% of where total volume traded. Right, so that to me is a curve. That is a done deal. That is something I might want to lean more into, right? But to me, it's all fractal. For example, look, I know there's a curve here. You can see it there. You can see there's a curve here. You can see that there is a curve there as well. A little ugly, but if we stretch it, you can see them. Let me bring this in a little bit, not get all those wicks and shit. See, that's a curve right there. There's a fucking curve there. We know there's a fucking curve over here. Right? So to me, this is the true... A curve is really a fucking range. And if you go down on smaller time frames, they tend to be a little cleaner. You get a cleaner rotate. Like these curves, it's like actually going from one side to the other. And these aren't small moves, by the way. These are about 10-point rotations. So those are pretty decent rotations, right? This one right up here, 5, 10, 15 point rotation, almost 20 when it wicked hard. So to me, the smaller you go on a time frame, the less noise there is. I know that seems contradictory to some degree, but the patterns start to get cleaner because the price action can only do so much shit. The smaller you go on the time frame, the less like random weird shit the price action can do. The bigger the time frame, if you're looking at a curve on an RTH session, the price action can do like unlimited amounts of fucking combinations, rotations. Wick this, touch the point and control 4 times today. It'll touch it 5 times the next day. But for some reason, the distribution curve looks exactly the fucking same. You know what I mean? Especially when you make a TPO or some shit like that. So I know people trade it with success. I don't want to discount it. I don't want to tell you not to do it. I just will tell you why I don't fucking use it. Okay? It's fucking ranges. And once I started going down smaller time frames and running it like this or some shit. Right, there's a curve there. There's a curve there. I started to realize it's just a fucking range. And then I realized that the points of control were kind of like not reliable. Let's go to the 1 second chart. Let's actually find one of those ranges. Here's a good one. Right. There's a nice little curve. Now, if we do this, if we expand it to the backside and then we go forward, well, notice how the fucking curve grows. This is exactly what I was talking about in this. See how the curve starts to get longer, but it's like, do I fade it? Can I ride the trade all the way across the profile? Doesn't fucking work. Right? And now you're starting to get a bit of a... now you're starting to see kind of a different... like there's a distribution zone here. There's one here. There's one down here. And as I'm expanding it, it just looks like shit. And if I keep trying to fade this long, thinking it's going to go all the way across, I'm getting fucked. So if we really cut it up, where are the ranges cleaner? To me, this is a clean range. As clean as it gets. That's a distribution area. That's a true blue distribution area, in my opinion. Right here, you have another range. And it's roughly symmetrical. Then they kind of push it down here. This is fucking ugly right here. A bit of a channel. But yeah. Now, if we look at this, you know, what sucks about volume profiles is, are you using the current session or are you using the prior session like NADRO? NADRO uses PVAs, prior value areas, prior profiles. At least when they do the TPO on the NADRO shit. The problem with using the current profile is the fucking thing. It's like it can grow. It can do what I showed you here. It can just grow, and it's like, all right, I'll fade the fucking value area low and ride it across the profile. Oh, shit. Maybe they're going to break out. Wait, they're not breaking out. They're just fucking going to another range right down here, and then they made another, and now the profile's longer, and it's like, what the fuck? It ain't doing either. That's the problem with a current profile. Where the fuck's my mouse at? There it is. Now let's analyze this one. Right? And I have statistics on these things, by the way. We'll take a look at some statistics later. How's that sound? Does that sound good? You guys are all quiet, all of you. So I'll just keep rambling on about shit. Like a fucking crazy person that talks to themselves, which I do. Well, this thing wicked into the point of control. Well, there you go. It fucking worked right there. So we see the problem when you use a developing curve. It can grow and move, and then the point of control moves, and it's really mushy. So one thing I started to do a lot was just leave the curves like this. And I would measure the rotations on the point of control. So where am I cutting the curve off? Because see how it's growing and shit? Here's that distribution area. The pink line is the point of control. It keeps moving around and shit. We're going to fucking bounce there? Right at this point, it looks like a fucking range. Okay, you can see my mouse cursor. Right at this point, let's pretend we're on the hard right edge. This looks like the actual curve. So it goes way up. Maybe you could fade that in or whatever. It stalling would freak me the fuck out, and I personally wouldn't try to ride it across to the other side. Especially the way the market has been behaving this week. It is very much willing to fuck both sides. That's another thing that we didn't talk about with the algorithms. I think the modern markets, as of now, are designed to fuck both sides. There was a point in time when I could get into trades and they would just kind of work at some point. But now in order to get a big fucking hold to run, I'm getting fucking tested over and over and over and over. And then I got to fight into it 5, 6, 7 times. Then it works. But that fight, I get so fucked up on the fight that had I just scalped the whole time, I would have made my target. I think the market is designed to fuck both sides. Sellers and buyers are not equal. Just because that's another misconception I think traders have, is they get this idea that, oh, the sellers are winning right now in this session today. Now the buyers are fucking... No, they're fucking each other over because, like, for example, if there's this pivot up here, okay? Let me take a nice little screenshot for you. Okay, so let's say we got this pivot here. There are sellers, and let's say they're fucking holding it, and they're still holding it, and they're still holding it. Oh, shit, it's coming back. And then they stop out. Well, these sellers that were right here, what do their sell orders turn into? They turn into buy orders. Their stops are buy orders. Well, guess what? When their sell orders up here turn into buy orders over here, there are sellers getting filled on these sellers' stops. So that's kind of a dynamic that I think it was last year. I really started to look at that when I started getting into liquidity zones and shit. Oh, where the fuck? The fact of the matter is the market stops out buyers or sellers in certain areas to fill better buy orders or sell orders, their own sells. Like, it's fucking predatory as fuck. All right, you guys should know. You trade the shit. It feels that way, right? So now we have a profile. I don't like them when they're moving around, even though I trade developing ranges and shit. But for the sole aspect of the profile, I mean, where did we finish drawing it? At this point, you know, it kind of comes in up here. I mean, in this profile, it's like, where is the point of control? Because this is counting every tick, so the profile is a little messy and shit. I mean, it's down here, obviously, but if we look at it, look, they do pivot the point of control here. At this point in time, let me double check. We know there's a range here. We know there's a point of control. Here's the problem with those. Right? Right there. I want to zoom in so you guys can really see it. Here it is. It pivots it. And those of you who are like, I'm going to take a fucking breakout, it goes down only a few ticks. Right? It goes down 7 ticks. Which is a good trade for me. And then what does it do? It comes the fuck back up. So it doesn't cleanly really pivot that specific point of control. And if you guys are just joining, this entire video is why I don't use fucking profiles. It's a good one. Let's see if you guys are saying some shit over here. I was watching you on YouTube because I could see your beautiful face. Oh, okay. So basically, don't try to catch breakouts on these days. You can. I'm scalping a lot. My trades, we can look real quick. The average. Let's look at the average win on this thing real quick. Filter. The date. I think the market started to get fucked up sometime last week. But we'll just do this week because I think this week is a little different. Average trade MFE for me currently is 821. I am starting to get a lot of partial fills and shit more frequently, which sucks. That is just about 5 ticks currently. That's MFE. Oh, that's MFE. Actually, the average win is right here. We got a bigger average MAE than MFE, but we've made some mistakes this week for sure. Average trade P&L, the average P&L overall is it's like 2 ticks, and the average, yeah. So that's how far the trade's going in my favor on average. I mean, we're up on the week, 8,400. Here's a curve. It got a little wackadoodled for me at certain points. Definitely got into some trouble. Actually, on Monday, I was having a really hard time reading the regime shift. So would I say, yeah, I mean, I scalp. I think the VIX contracted very quickly, and we were getting big trades there for a hot minute a few weeks ago. Now it's kind of gone away. It's just the market is too predatory. And the moment every goddamn time I try to express some big brain idea, the motherfucker always fucking comes back. Lance Breitstein, he talks in one of his videos that most of the traders that he knows that are successful, that he coaches, are scalping. You don't need much to do well. The 2 prop traders, Chronic is scalping. He's scalping more, and it's turning his P&L curve around. I'll show that a bit later. But and then Miller is scalping as well. So I just don't. There's too much expected value shifting going on, basically. So looking at this curve, this son of a bitch, it rotates the point of control for 7 ticks. And then it comes up. It doesn't quite hit the value area. You could probably attempt to fade it, right? But then it's going to come in, hit that point of control, zip up. God knows what it could do. In this circumstance, it kept going, right? Hindsight. So developing, and meanwhile, this entire time, this curve is like morphing and changing, and the POC moved again. So let's say we're not trading this curve anymore. Let's say this curve exists. I used to do this a lot. I would do this. I'd go, all right, that's the value area. And then later in the session, yeah, the point of control kind of rose here. And I used to count the expected value on something like this. They tested it 1, 2, 3, 4, 5, 6 times. And then they finally slammed through it. So there's another method of using profile. And hell yeah, 33 people are in here. Lance also says to trade stocks and play. Yeah, I agree. I think this is probably the problem of trading just one fucking market, is it's very fucking difficult when the fucking regime's so fucked up. There's another guy, He used to be with S&B years ago. God, Ryan Trost. He has an interview. It's like 2 or 3 hours, and he left because he developed an app on. It was like breeding digital horses and gambling with horses, and he would breed them and get like genetics, and it was this whole app thing. He used to be a hardcore SPY trader, and then he sucked at it, and then when he switched to stocks and play, you would do better. He said that over the several years he worked there, Shark, who's an S&B trader, just never made money on SPY. But this is all I fucking know. This is what I've done. My entire fucking career is just this. It might be easier to do that. But he also says these guys are scalping. So if they're playing broken slot machines, most of them are fucking scalping. He says trading ES is harder because it's more efficient. Have you considered trading stocks? I have considered it. I just don't want to be like scanning and looking for that shit. I can do this. That's the thing. Is like, well, this works for me. And at this point, I have considered it multiple fucking times. I just never did it. Because it's just too much shit for me. I don't want to switch platforms. I'm lazy, alright? That's the truth of the fucking matter. But now I got a trader. Well, I'll show you. He's... you know, I have 2 traders that I'm coaching for my prop team. And they're trading ES. Let me pull up Chronic. Chronic was on the last Hump Day episode. I'm just going to show you guys where he is at now. But the few traders that I'm working with here on ES, it's working for them. It's fucking hard, that's for sure. Chronic is starting to make a nice recovery, by the way. Wait, are these from today? Did he trade today? Oh, he took trades today at the fucking close. Did you really do that, Chronic? Well, he was doing good. He didn't hit me. We didn't coach today for some fucking reason. Let me look. Yeah, he did trade. All right, well, fuck. What time are these? 1:50. Oh, he traded right near the close. Well, we were supposed to fucking work together when he didn't hit me up, so I guess who knows what happened. Either way, when I looked at it yesterday, this was fucking straight the fuck up at this point, and I guess he got into trouble and shit. But either way, he's doing pretty decent. I mean, it's recovering. It seems like he got into a little bit of shit and managed to pull his way out. Let's actually look at this week here. This is his week. Oh, he took a big slap to the fucking head. See what happened. Trade 4. Let's see what he did. Do a little sideline coaching. So he got long on it to go for, like, I think a V-flush or some shit. So it looks like there's a range up here, and he's trying to go into a V-flush. And he just gets... It jerks around on his entry. He's covering it. You can see it right there. He goes to get out of it, but it doesn't fill him. He chases it. You can see that red square dropping in. He should just pull the motherfucker. He got greedy on it. This was not the day to do that. and then he stopped. And I think because he did come in near the close, I don't know if he was rushing to make P&L or some shit. He was down on here. What happened? He took a confused trade, which this is his main focus, not to do that. Don't trade confused. He wasn't totally crystal clear on this trade either. Let's see how he started. He was pretty clear on trade 1, 2. Trade 3 was confused. Trade 4 he was not completely clear on, and then he started to gain clarity. And see, he's not crystal clear on a lot of these trades. Like if we come in here and let's do this. Either way, I mean, trading ES, that's kind of the thing. This is news for me, okay? Because he was doing so good. I'm like, why is his P&L curve kind of fucked up? I don't know if he's trying to rush it. Let's look at today. Confused. And then we'll get rid of this. No, we'll leave that. We'll just go to today. Yeah, half of his trades he wasn't crystal clear on, which cost him $58. 5 out of 5 were not crystal clear. And then there was one where he was totally confused that just killed him. That's the most important thing you guys can do. Volume profile is gash, a bit of a historical tool in my opinion. I never use it when trading, just DOM footprint and tick chart ES. Has been choppy as hell. Yeah, I explain why in this. But the crux of this video is why the fuck I don't use it anymore. Not good. Chronic, if you're watching this, you need to let me know when you're fucking trading. Anyways, moving on. So let's say we're not trading a fucking profile that's moving around and shit. Okay, this son of a bitch is stable. This is this area. It tested a lot, and it's rejecting off of it. It kind of goes in through there. The Nadro method, you would be playing these things where it's pivoting it and you're playing pullbacks on it. So hypothetically, the Nadro method would be to play the pullback off of that. And it would have worked, but it would have kept pulling back. It stays the same until proven otherwise. How far are you going to ride it? I don't really know. Usually to another prior value area, and I don't think there is one down here. So you can do that where you can play prior value areas and shit. This goes right through there. But that's the problem with some of these prior value areas. Let's see. Let's go to the 30-second. I mean, like this, for example, and this is a lot more aggressive than Nadro. But this thing starts to like half-ass, half-overlap. And I know this is like a smaller time frame than what they do, but when that kind of happens, you would combine the profiles. And it's just a fucking mess. To me, I started to realize at some point that it's about the price action. It was always, oh, hold on. I noticed that you are logging your psychology state. Are you sure this is even a useful metric? Absolutely it is. Simply because this probably has a subconscious bias depending on whether the trade was... No, you start... Here, this is how it works. Let me go to my journal. You can't log your emotions an hour later during the review. So I could see where you might be thinking that that might be off. So let me pull up a fucking journal and show you what the deal is. You run a loop timer. Run a loop timer every 5 minutes or so. Let me go to my trades today. I haven't reviewed them yet. Let's say it's a new day or some shit. Let's say it's tomorrow. We got a trade. Right. 3-minute loop timer, run it. Every time this fucking thing beeps, I gotta look at this and then I gotta update it. Am I getting upset? Yeah, a little bit. Am I okay with the P&L? I'm okay with the P&L. This is contentment. Do I want to trade now? Yeah, I have an urge to trade. And then every like 3 minutes, this thing will beep up here. I check in, recheck in, check in, recheck in. So this is a more accurate way to get the emotions. And how's my read on price action? This one's the most. Am I fucking like, if I'm sitting here and I'm like, I have no idea what is going on, and this is checked confused and I put the trade on? Because like I'm tagging before I put the trade into this. Same thing, like, because this journal works with Sierra charts and rhythmic data. It'll bring in the live trades. I have to upload mine later. But you can start tagging your emotions and all that before the trade gets imported. So the moment you execute live, whatever tags are here are going to sync with that. So I think you can't do this. I don't think you can tag your emotions 2 hours later when you do a review, because you don't fucking know. But also, I record the sound of my voice when I watch the recording, so I can tell by the way I'm talking something's not right as well. Is it the most accurate? It's a useful metric. It certainly is. I'll tell you that, especially the clear and confused one. Like if you're taking a trade and you have no idea why what the price action is doing, it kills you. And there's about 5 traders who are using this exact statistic, and every one of them, including myself, we get the same sort of metric. Confused trades perform like shit. The clear trades perform good. And the ones who are journaling in wave 2 for the prop tryout, when they are taking trades, when they are crystal clear on what is happening, because edge is clarity. Let's face it. Like, you know what's happening. You know what you need to do. When they're doing that, their performance seems to be being boosted. And if you're taking a trade outside of clarity, you're probably not patient. So I would say, yeah, the metric is when you're running a loop timer, like this is about to beep, right? So it goes beep, 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 beep. This is going to get a whole rework in the future edition. But then, you know, it beeps. I'm like, well, how am I feeling? Maybe I'm not so upset anymore. And then even though I didn't take a trade, I'll start to like move these around like that. So, well met, Fat Cat. Oh, that's really interesting. Scalper here. The only way in these markets, in my opinion, unless you're running a negative RR, I agree that scalping is the way. I'm doing well. Another trader that I have that's about to do it, I'll show you his statistics. Let me find it. He's ready to go. We're going to trade tomorrow for the first... I mean, we've been working together for some time, but we're ready for him to start trading. Also a scalper. But yeah, I think loop timing, the shit. Let's see. This is Miller. Let me figure out if he's got There's his overall equity curve. Out of 1,000 trades, he's taken vastly more than me, but he's more of an aggressive scalper since November 5th. Now, he's gotten into some real fucked up areas where it went super flat and shit. That's a lot of fucking trades. You kind of want to cut that down a little bit so it's not showing so much goddamn data. We'll just go to the January. Even January is going to show a shitload of data. We'll go to February. You know, you can see he's got in a little bit of trouble in this zone. I don't know what was happening. I think he was... That's a lot of fucking trades. I think this is when he was trading his own personal AMP account. Either way, scalping is the way. And it's always been about price action. So when I would trade these volume profiles, even VWAPs and shit like that. Is this a sim account? Yeah, that was his sim account. We're going to get him funded. Same with Chronix. Chronic is going through the futures desk. He's trying to get... we're trying to get funded because they're my partner. They're my money partner. And we split the account 50-50 after funding. But I've put in a tremendous amount of work with him. A tremendous amount of fucking work. And I don't get paid for the shit until he gets paid. Can you plot that as a graph over time? Yeah, you can. Let me see here. Let's look at Miller's deal here. We can look at his emotions over time if that's something we want to do. Let's see if he has... I think he's running the same exact tags as I do. Are you getting upset? Are you okay with the P&L? So this is patience. We'll track patience. Now, some traders, it's sometimes you're lying to yourself a little bit with patience, and you're not marking it right. So this is his patience over time. Well, this is patience over the course of here's over time. This is all of his trades over time. So each square right here is a session. Let me get rid of my head. Right? So, I mean, the last time he had a lack of patience was January 16th. I don't know how accurate that is. We can always check out his clarity, which is this one. And then we'll check out his confusion. He's not running an in-between tag where he's like on the cusp like me and Chronic. You can see that over time he's still making confused trades. The last time he was confused was April 4th. So that is over time. This will be date. Right? Take the markers off. So that all of us, there's other traders who are running this metric with clarity and confusion. All of our graphs look exactly like this. Even mine. So I'll pull up mine. So yeah, they're on sim. They're trying to get funded live, so we have to trade sim. And then once they get funded live, we'll be good to go. So Chronic is kind of halfway to target. He should have hit me up today, which was a mistake. I'll have words with him about that. It's tough to perform every day, fucking reliable, I would say. But as far as let me just hide this shit. Main dash. Here's my clarity and confusion right here. Now the in-between tag is a newer tag. We'll do it over date. So this is when the in-between tag was first implemented back here. So being crystal clear is very important. And we can see that the last time I was confused was definitely this week. Today, or yesterday actually, then April 15th, April 11th. So there are periods where I'm not doing that. But yeah, so yeah, going back to the whole price action conversation and profiles and shit, I started to realize that with, as far as volume profiles go, give me a second here. As far as profiles go, it was always about the price action. You could have similar profiles that look identical to other profiles, but the price action is vastly different. It was about price action. It's always been about price action. Even when I looked at a depth of market, I always had the auction vista up. So I didn't realize that it was at a 3-second time frame, because I didn't know what interval meant, and for a long time I was running a 3-second chart. And I looked at it a lot and could make pretty good trading decisions on it. That's why with my 1-second chart, it looks like a auction vista. Like you can see each tick, the way the bars are cut and shit. And I think that on these smaller time frames, you just have a bit of a cleaner pattern. For example, we can look at a trade from today or some shit. I still need to review them and shit. Let's look at this one where we made 1,800. Do you think your negative reward? Hold on. They're up. Hey, the Wednesday talk videos are up. You need to go to the live stream tab on my YouTube channel. The other 2 episodes should be up. They get pulled and then they get re-released like the next day. Hopefully you heard that. Do you think so they're up, they should be up. We're getting views on them. Yeah, for sure. Do you think your negative reward to risk ratio / profit factor is something you can fix? I think well, I don't think I really have a negative risk to reward ratio per se. We can go to main numbers. Give me a second. So if you look at everything, average trade P&L is at 315. It's about a 1-to-1. So average. I'm sorry. That's the whole average. The average wins are 892. So if we look at the average wins, they're 892. Roughly, let's see, that's roughly 6 ticks. And then the average, yeah, it is actually negative. So how many, what is it, 1,068.66 divided by 862. This is every trade, so it's a little backwards right now. It's at 1 to 1.19. That is every fucking trade. If we go to, you know, when did the volatility pick up? I think it was like, let's just say the beginning of March. I know it was like mid something. Changes, it's still a bit negative. But for the most part, I'm operating at a 1-to-1. Now, the thing is, what we need to do is, like, also, what if we filter out the really bad trades? You know, what if I filter out, I only want to see clear trades, for example. I don't want to see impulsive trades, right? And then let's get rid of the date. And then it goes, oh, well, that takes out all the 71 losses. It's still going to be kind of off. It's kind of 1-to-1-ish. Skewing slightly to the downside. Just how it is, man. So I don't think that statistic really means shit, to be honest with you. As I've been combing through statistics, I don't think I was showing this, but I don't think that statistic really means much. I think what matters most are like the individual tags themselves. Like, I know that these emotional tags do hurt me, and I know I can fix that. I know I can control that. If I'm feeling rushed on the session, I know I can control that. I know statistically conservative trades over aggressive trades seem to work a little bit better. I can control my aggression. And I know having total clarity over confusion leads to better trades. I can control that. I run close to a 1-to-1 risk-reward ratio. That's what works for me. I don't really know if I buy into the whole 2-to-1, 3-to-1s. I think the further out you go on your risk-to-reward ratio, I mean, the market's so predatory. And there's just times where I need to get into trades that fucking breathe. I don't know. It doesn't seem impressive, but why is the fucking equity curve rolling up? Let's see. Is something you can figure? Is there a manifestation of your system over this current market regime? It does change, though. What was interesting when we were in the VIX 50, I had a slightly more positive risk-to-reward ratio of one, just over. It was like 1.14 to 1 positive. Are you still trading 12 lots? VIX 50, I did go down to 6. Come back to 12, but now I'm starting to suffer with like partial fills at times. So I'm having or the order starts to slip or some shit into the next price, shit like that. So I am having a little bit of a more difficult time as of currently with a 12 lot. But when it was VIX 50, I had to risk more. So, it was 20 point, 15 point stops. But I had to get a minimum of 5 points on the fucking thing. So that's just how it is. But if we look at, like, for example, so we're up on the week. So if we look at, let's take off all these filters and shit. Let's look at the risk-to-reward ratio for the week, right? So we'll go to date. That's MFE. Oh, that's the wrong shit. That's MAE. We'll go to date, add filter. We'll do all the way to today. And where are we sitting right now? Average trade P&L. Average win is 723. But here's another thing. Okay. So we're at 1360 on the downside, 1360.42, because I did get into some big stinkers, but I ground out of them. But our win percentage for the week is 79%. Okay? So I do have a higher win percentage, 723 by 37. So almost a 2-to-1 as of this week. It's at a 1.8 to 1. If we unfilter all of this, that's just this week. My overall win rate is 67%. So I win more than I lose, even though that risk reward seems skewed. So that's kind of what's going on right there. What happened to the indicator we were developing, the reclaim indicator? It never got fully flushed out. So I used to have an indicator that showed reclaims. I have a video on it. It never got fully flushed out. As volatility was changing, you had to adjust the settings all the time. And the developer that I had working on it, he just did it as a free deal for me. He just did it for me over the course of a few weeks. And then he offered me coding services, and then I hired him to build this journal. So that's... It had to be adjusted so much that we just ended up... I just don't really use it. Some other people do. Looks nice too, Tradecraft. Great to see it supports Sierra. We'll take a good look. Yeah, we're about to launch a free version. There's certain things you can't get away with. And I don't think the free version is going to allow for Sierra Trades Live to update, because when you take Sierra Trades, they'll come right in the journal, but you're going to have to import them manually. So you can fuck with it for a while if you wanted to on the free version. So if you want to do that. But what I'm starting to notice, because it's easier to tag now and shit, is like, especially management tags are the most important thing for me right now. The most important thing for me is like managing tags, or my management tags. The psychology tags being clear and shit. So I do have statistics. Now before we kind of pivot away from the profiles, I want to show you the profile statistics. It would be all of these right here. So what we'll do is we'll look at them one at a time. Let me make sure that this is not filtered in any way. Yeah. So this is higher. So I'm tracking three ranges: higher time frame, medium, and micro ranges. So these would be bigger profiles, medium profiles, and very small profiles. Because again, we've established their fucking ranges, essentially. I used to suck on breakouts. Now I've gotten substantially better with them. So the yellow line will be the breakout. The green line is mean reversion. And by the way, if there's like an oversized trade, I do have... let's get rid of our outliers. I have a tag called outlier. You just cross that out. I'll actually show you what the outliers are. So it's showing us outliers. Put on the marker. If you just click on this, it'll take you right to it. This would be a $10,000 loss. I don't take losses that big. And this trade 20, was a $10,000 win. And we can see the recording right here of that trade. You can see it just starting to play it. But we implemented this feature a little later that we don't see the loss on here. So we can see it's playing in the recording of that. But so if we remove my outliers, which I think we should by crossing it out, stuff that's like a little bigger than what I usually do, wins and losses. These are my breakout trades. All of them on the higher time frame are performing relatively well on it. What we can do is just, we can filter it down further by looking to see if they're conservative, aggressive, are they clear, are they not clear, shit like that. These are mean reversions on the higher time frame. For the longest time, it was relatively flat, and I struggled with meaner reversions on the higher time frame. And this is trading in the middle of the range, this red line behind my fucking head, which I need to remove right there. So, yeah, that is the higher time frame. So we're performing well, better on breakouts. Right, these are massive multi-day ranges usually. Something on a 30-minute chart. This one right here is going to be medium ranges. And we can see we got into trouble with mean reversions on the medium, and then we kind of ground out. Here is trading in the middle of the range, which isn't really performing all that well. And up here is the breakouts. But we have to ask ourselves, like, what happened here? We can run further filters. Let's look. It actually has a recording of it. I held too long, and I was giving up on it, and I was not okay with my P&L. So I was, like, Must have been fighting this session. There's the trade. You can see the range actually right here. So that would be a profile right up here. Right? That if I drew the profile, you could see it. So I'm trying to mean fucking revert the motherfucker, and I don't know how long this goes on for. Yeah, so it does work initially, and then it starts to dump on my ass, and then let's see what happens. Yeah, and then it blows me out. So we were in right up here, and then I got blown out. This is the problem with fucking profiles. Just kind of got greedy on it. I can see that I was giving up on it. This is trade 15. What day is that? 226. If we go here and go to 226, here, let's see what happened. Yeah, we were down right off the rip, and I was struggling to even be green. I was fighting my fucking ass off. So I was starting to get, like, decision fatigue and all that shit. I can tell you just by looking at that. That's a lot of trades. And just being down for that fucking long. Could you go over what it mean against and mean favor is? Yeah, for sure. So, so we have the ranges, you know, here's our ranges. And let me do this. This will be a lot better. If I go short here, this will be mean against. Right? And let's say the midline is, here. So I would say anywhere from here down is going to be mean against. Anywhere in here, so if there's a trade placed here, this is mean mid. And then if I was to go long here, it's mean favor. If I was to go long up here, you know, that's mean against. I'm going the opposite way of the range. I'm not going in with it. So that's how that works. And then there's obviously I have range none tags. There's a lot of those. Because I want to know when there's not a fucking range. Which there's quite a bit of those. Let's see if our main number. See, you can see mean none, 276 trades. Mean medium, 361. This is when there's no ranges at all. Most of the time there isn't a range. We seem to be falling out of that. But if we go to my main numbers here, we can see that I'm doing decent on medium sizes. And then here is micro ranges. These are very small ranges, like several seconds. What I have to do in order to understand this better is I have to start running more filters on it. Like how many of these are confused? Shit like that, right? So like what happened here? Well, I was fucking confused. So what does this look like if I get rid of the confused trades? So we'll say we're not confused. We'll just say anything clear. No, that's what happens when I'm clear. So what this is telling me right here is like most of my breakouts I'm taking, a lot of the breakouts in this area, I'm doing it when I'm not super duper crystal clear on the fucking deal. That can be the difference. Like, psychological tags, in my opinion, really skew the results of other tags because you're part of the equation. What you got to understand is there are, and I do this a lot, but I'm going to do it here. Okay. This is you. Are those tags not biased because on trade outcome? No, because I'm tagging my emotions during the session, right in the moment. I'm running a loop timer. So I'm running a loop timer, and I'm tagging my emotions like every 3 minutes, sometimes 5 minutes. I check in with myself. How do I feel? And I'm honest. And they're in question base, right? These, are you getting upset? The loop timer goes off. Yeah, I am actually. Are you okay with the P&L? It's bothering me. Because maybe I took a huge loss. That's bothering me. Are you wanting to trade now? No desire to trade. I want to trade right now. That's impulsive. I feel this like the moment. So I'm really trying to be as honest with myself in the moment. Every 3 minutes, the fucking thing beeps. I'm moving the tags around. And I'm just trying to be as honest with myself as possible in the moment. I don't think you can do these tag groups up here after the session. I think it's a lot harder because you don't really know how you are feeling. That's why certain tags are done during the session and certain tags are done during the review. So my work is a bit split up. But going into this, this is you, and these are based off the different tags and shit, for example. And then we'll do this, okay? Oh. So over here is going to be like, God damn it. Okay, over here, we're going to have like your trading screen, your order flow, your technicals, order flow, fundamentals, charts, price action, anything that's coming from the screen, it's in here, whatever. Over here, you're going to have psychological, right? We'll just do that. It's you. You're in the equation, whether you like it or not. You're clicking the fucking button or you're coding something up to click the fucking button for you. And then obviously here, this is going to be management. This is the tether between you and the technicals. The technicals can be influencing the psychology. That's usually what's happening, which in turn fucks with the management. I think the psychology needs to be as, I'm telling you, when I feel good, because I've been tracking this shit since November 5th. When I feel fucking good, and I feel on point, and my psychology's dialed in, I'm real aware about how I'm feeling, I'm being really honest with what's going on, and I'm tagging live, that is important. That does affect the management. If I'm fucking pissed, I'm going to fuck up here. I'm going to FOMO a trade. I'm going to revenge a trade. And no form of good management is going to get you the fuck out of a shitty trade. A shitty trade is a shitty trade, and you're not going to outmanage your way out of the motherfucker. So, like, part of the filtering process is, like, how much of this is affecting certain setups? So what I want to do is filter out all the psychological shit when I'm not like feeling my best and super clear on the market. And what do those setups really look like? What are the statistics? We already saw it on here, I'll do that again. Look. So here's the medium. Let's just do this real quick. Let me clone the medium and paste it here, and then we'll go to widget setting, which is up here, and then we'll go to the filter. So that one will be all raw, unfiltered. Let's look at tags. Let's go to, we're going to get rid of the outliers. We're going to make sure that it's only clear. We're going to want to look at just trades where my psychology is super duper fucking awesome. So which would be these. And then we want to, then coming to the rating system, because that every trade gets starred, and I want to get rid of any red star trade. These are usually impulsive trades. So this right here and this, and we'll just we'll do this for now. Look at the difference between mean reversions. Look how smooth the curve is, and look how much more smooth the breakouts are on medium time frames. See how it's not so jagged and whippy in certain areas? So that's the thing. When you look at the, it's like when you're looking at the, what do you call it? Let me get rid of that. When you're looking at your statistics of setups, it's like, well, how much of you are fucking with it? How much are you fucking it up? And I don't think enough traders are doing the work. Whether you want to use my platform or a spreadsheet or whatever, I don't think enough traders are like really looking at that. And then you think the setup doesn't work or anything, but it's like, how much of it is you fucking those statistics up over here, right? And I think when you get your technicals in place and your psychology is dialed in, I think the management is sort of the last thing. Let me see what you guys are saying. Yeah, we've been working on a free version of Tradecraft. MetaTrader will be soon. I'll talk to the developer tomorrow. But we're trying to launch a free version of Tradecraft. So people, because I think it's such a radical thing, what we're building, that I think people need some time with it to fuck with it and not be under pressure and shit like that, and for people to at least have something. Can you export and share stats graphs from the journal software? To be honest, 33 is no-brainer. Not happy with my current journal. Doesn't sync well with Sierra charts. Ours syncs with Sierra charts. I know you can do something with your own data, and I also know that another really cool thing is you can, if you have the ability to code, this guy, he coded this in Tradecraft. We have a widget for people to put some code in, and you can make your, you have access to all your trade data. You can export it. And then I don't know how this works because I don't do it, but this guy made this in the actual widgets section, and he's working on a calendar that's in the widgets section as well. So if you go to the widgets, which is down here, right, custom Java code, experimental, you can make your own widget with the data you have. Can you export and share stats and graphs? Not the stats and graphs yet. You're going to have to screen share them. We want to have a sharing feature at some point. But going back to this, management, that's a really big one for me now. And I started to realize that I wasn't tagging the management as good as I could. So here's what I did, because we have a book of charts. I'll just put it here. Actually, no. I think I have it in the current day. Let's look at my management. Okay, here's my management for, let's look at like this week, for example. So April 20. 23rd. This is the book of charts. It's just a widget. It'll show up really quick. It'll show the videos and shit. We'll do one call at one picture per. And let's look at my management issues. So what I'll do is I'll go to tag, because I have several. Before we do that, let's look at my tags. I did update them today. So we have entries: perfect entry, entry early, entry late, entry should have not happened, exit perfect, hold more, or held too long. So typically, that right there is going to be like your. That's the three possible scenarios. I mean, if the trade was shitty and bad, you should never took it, right? That's kind of why this is here. Entry should have never happened. But one of three things is going to happen. Either it was a great entry, but the exit was shit. The exit was good. The entry was shit. But were you too early or are you too late? I just added new tags today or yesterday to update this a little bit. So we can kind of filter that out. So let me actually, I think I did them yesterday. Now I have plenty of tags that are hold more. So if I'm leaving too much money on the table, I'll go like this. Oops. And it'll show me the trades where I should have held more, which between the 2 days, there were no trades so far. Actually, today's not even fucking tagged. We can look at early or entry late. This is almost like a FOMO entry. It looks like there's one trade. So what I do is I go through the book of charts. This chart is attached to that tag. I think this was yesterday. I'm leaning slightly long biased. And then what I can do is come up here, hit next, because there's a liquidity zone. That's a 30-minute chart. Make sure you label your shit. And then I go to the next screenshot, and then this is how I label my shit. There's a tutorial on how to do this, but you can see I put the entry late tag up there. So price is doing 2 ranges down. Oh, it should say the number 2. 2 ranges down in a row, then 2 up. So number 1, number 2, these micro ranges puked. Then it went up. 3 and 4 were micro ranges. They puked down. 5 went up. So I'm thinking they're going to do 2 ranges up. I get into this little range right here. My entry, ME is my entry up here, and it pulls back on me pretty grossly. And then I exit for a tick. Ideally, my ideal entry should have been there. So now I'm looking at it, and I'm internalizing the pattern. What I can do is let's do the entire thing here. Let's go to last week as well, because we can look at our exits. Let's look at all the trades where I was leaving money on the table. So now we're looking at the hold more, which is a management deal. So these are going to be all of the different trades. This one just happens to have 2 screenshots in it. So, and we can filter this however we want. Let's look at entry date. This is 4/21, so that's correct. So this is a big ass channel low. I hate how that does that. The struggle grind is breaking up. Okay, so this is giving me context. It's a 10-second chart of 1 second. Make sure you label the shit well. This is how I fix management. 1 second, 3 and 6 alternating micro ranges. So here's 3, 4, 5, 6. So this micro range puked down. Fuck. This one went up. 5 went down. 6 went up. Since micro ranges are alternating, I speculate this will break up. My entry is here. It does pull back on me. My exit was up here. My ideal exit should have been up here. Now, the problem is when it comes to like looking at your management tags, you got to be really honest with how you would trade. Like, would I have really held the top of that move? I think that's the problem. Is I think new traders will get into like labeling up charts, and they're like, "Well, I should have held it all the way there," or some shit. Would you have really? As a scalper, for example, I'm saying I would have got out where the price action would have struggled realistically. I would have never rode it to the peak of that little move. So there's that trade. We can go to another trade. Hold more. My entry was way back here. Goes against me, and then I exit for almost a break even, but then it ends up shooting up. I realize we're in a range, and slop is holding both ends. I go for a squeeze, holding up slop. Slop is a term I use, and I know, okay, I remember this. You want to make sure you label your shit to where you understand what the price action means. And this is how I fix management. But going back to this, the psychology's got to be like in fucking check. Like the first thing I would do if I were you guys is run a loop timer, check your psychology, like every 3 minutes or some shit. I did this well before this journal existed. I have old YouTube videos where I did this shit all the fucking time. I would do it in a notepad, actually. I would put a frowny face, a smiley face, shit like that. And then I would mesh it up with the P&L. It took a lot of work. And then like see where the frowny, like screenshot the P&L and then put the frowny faces on there and see how it was affecting me. And then I started tracking it in another journal. And then I would filter out the psychology tags because I'm in control of psychology. I can choose to be really upset. And the problem is when you're upset, the blood is flowing away from the prefrontal cortex. So you're no longer able to focus as hard. And having blood up in that region does help with impulse control. So when you're getting tilted and frustrated, which we're going to do some interesting shit in the future. I'm going to start using EEG on my traders and watching their brainwaves through the session to see how, to see it shifting, to see if they are truly getting upset. Because right now the best method is a loop timer and tagging it. So can EEG technology be used, and they have cheap ones, to kind of make that tag decision for you in the moment. You can also run a heart rate monitor. They're cheap as shit from Amazon. I have one. I haven't done it in a while. You can start tagging your fucking heart rate. But I did have a video on the 3 ideal emotions. They're contentment. Let me actually pull it up. Actually, I wrote a big-ass fucking blog on it. Let me pull up that blog real quick for you guys. So I wrote this. I write blogs on the Tradecraft website. There's a lot of blogs. Okay, so this is like the ideal emotions. I made a video on it. Contentment, calmness, and patience. What are the opposite? The opposite of patience is impulsiveness. What is the opposite of calmness? It's tilt. It's anger, right? What is the opposite of contentment? That's going to be uneasiness. So when we look at the tags, those to me are the 3 ideal emotions when it comes to this shit. When we look at the tags, are you getting upset? No. If I'm not, that means I'm calm. If I'm pissed off, that means I'm tilt. And a lot of traders are familiar with tilt. Are you okay with P&L? This is contentment. This is when you start to revenge trade. So anger is one thing. Experiencing the difference between being calm and trading and anger is a whole different thing than being okay with the P&L. Like if the P&L is bothering you and you took a loser or you took 2 or 3 losses in a row, everybody has a threshold at some point. For some traders, they can take the first trade blows them out of the fucking water. They just freak out. For other traders, they can take 2 trades, 2 losses in a row. But God forbid when that 3rd loss comes in a row, they're fucked. they fuck it. There's like this threshold. There's this point where you start to lose your shit. And trading's not perfect. I remember there was a point where I was fighting the market a few years ago, and I kept getting a one-tick win after one-tick win. And I couldn't get a trade to fucking run for shit. And the moment I went to 5 one-tick wins in a row, I lost my contentment. I'm not okay with the P&L. I'm getting fucking upset here. So you can see that just tag it like that. There's a point where you have to push through it. For example, chronic, when there's a spike down in the market, he would want to take a trade right now. Are you wanting to trade now? The opposite of patience is impatience, impulsivity, right? So what you got to understand is, like, these are the 3 ideal emotions that most traders aren't focusing on. And this is a good blog. I'll link it in this video at a later time. Come back or go to the Tradecraft website and just go to the blog section. It's sim trading versus live trading. Emotions aren't the same. If you want to read it, it's pretty extensive. See, and this is the drawing I made. But like, what you got to understand is, like, it's like a table. If you're not calm, if you're not content with the P&L, you might start to want to revenge trade back. So therefore, your patience loses. And the moment any of these legs start to collapse, your focus comes off the table. The blood flows out of the prefrontal cortex, which is impulse control, and you're no longer to focus. So you want to constantly maintain, awareness around those emotions. That's why I tag the emotions during the session. Can I lie to myself, and has other traders lied to themselves about their emotions? Yeah, it happens. It's like, well, actually, I really am upset, but I'm going to just put no. But I don't know any other better method than trying to really find self-awareness with your emotions than to do that. And these fucking emotions, the psychology, it's skewing your fucking management, and it's skewing your technicals. And this is, when I first started to experience consistency, I was tagging, and then I filtered out impulsive trading. And I realized I can actually do this. I just need to work really hard on this one little aspect of trading. Like, I need to make this a priority. It's not about getting a big P&L. It's about stop doing that. So how can I stop doing that? There's a video I did some time ago, how to stop over trading. And this blog actually tells you the method of visualizations, because there's plenty of studies on visualizations. Because people are skeptical about visualizations and shit like that. All I can say is placebos exist in drug trials, and they fucking work for some reason. So the mind is very powerful. And every price pattern and P&L swing you're experiencing on the charts, for instance, chronic, when it spikes down, he's got to go long. Not when it spikes up, when it spikes down. So we have to get him in a meditative state. He has to be calm, content, and patient. And we watch the recording, because when you record the trades, it triggers you. It can trigger you again. It can trigger those emotions again. Trust me, if I took a trade that pissed me off and I go watch it again, I'm not happy again. I feel upset when I watch that recording again. So the trick is to continuously watch it and visualize you didn't take the trade. And just pretend like you're calm and patient. And if you don't feel it at your core, you have to keep doing breathing exercises, Wim Hof breaths, visualize, or meditate, I should say, whatever, until you feel absolutely calm watching that footage. I know this is a lot of work, but trading is very fucking difficult. And these are the things I'm doing to get these guys to improve. And with Chronic, it's been a fucking battle. Because then he starts to revert to these really shitty psychological habits. And since we trade together, live together, so for today, I don't know what happened, Chronic. But when we trade together, I can hear it in his voice when he's starting to get upset. So having a form of accountability to check him is sort of the best method until we have technology that locks you out. That's EEG. So that's sort of kind of where this goes, is like your psychology needs to be in check. Because your psychology is skewing the results of your trading and your setups and your edge. And this is I'm not going to say it's the easiest thing to fucking fix in the world, but there are certain tags and statistics where it's like, yeah, that's hurting me, and I know exactly, I'm in control of that. So focusing on that will boost the P&L. Whereas I think P&L in risk to reward statistics, I'm starting to realize after using this journal a lot, that shit kind of doesn't really fucking matter. It's very nuanced things, like what I'm speaking on. And every trader I've ever dealt with has psychological issues. Every fucking one of them gets in their own fucking way. Even Miller, he's real scared about sizing up. He's scared about taking more than 12, because he averages 12 ticks a day. He's scared to go beyond that. So he's going to choke, and then he's going to fuck up. It's like when you get funded on a combine or whatever, and you trade live money, you start thinking about that, and then you start choking and fucking up. So the management, in my opinion, is sort of that, you can't outmanage bad psychology. So then what you do next, as I'm going off the fucking rails, is that book of charts where, the trades are what the fuck session is this? 2-3. Okay, this is before all that shit. Let's go to yesterday. Put the screenshots in here, and then there's the widget, and then I filter out. You just like flip through the fucking things, and then I think it's important to label ME for my entry, MX for my exit, IE for ideal entry, and IX for ideal exit. This is obviously, let's see if there's a trade where I needed to hold more. Not on this specific section, so let's go to Monday. Oh yeah, I took a fuckload of my psychology. I was so confused, and it fucked me so bad. Here's a held too long. So if we look at the screenshot on that, that should reflect my entry, ideal exit, IX for ideal exit, and then my exit. So flipping through the charts and just like internalizing the shit, I think is important. S&B talks about it, but let me see what you guys are saying, because I'm about to piss my pants. That's why I keep moving around. Let me see what you guys are saying. Where in the fuck did I do with the live? That's not it. I don't know where you guys went. I don't know what I did with you guys. Ah, there it is. See, I go on that rant. It's like, all right, so good morning. Let's see. What is your favorite trade type to enter? Mean favor long, mean favor short, mean against long. None at this point. I think I tend to gravitate towards breakouts. I would say I like taking breakouts. That's what I enjoy, but is that statistically the right thing to do? Make sure they're all in low theta wave. I assume that's for the EEG talk. Did you know what the term tilt comes from? Pinball machine? Yeah. I didn't know that. Well, I knew that tilt was part of a pinball thing. They used to have a mechanism that would detect if you bumped the pinball machine to try to cheat. It would register a tilt and freeze your paddles. I get it from poker. That's what other traders say. What do you say to people who claim that psychological problems with trading is really due to lack of edge? Here's my thing is, how the fuck can you have edge if your fucking brain's all fucked up? How are you going to find edge and execute the edge if you're being impulsive or you're getting upset? You know, or you can't hold the fucking thing. How can you develop edge? And this blog talks about it. How the fuck can you develop edge as a new trader if you're not actively working on your psychology? Because come back in 6 months when I have more data on more traders, but for fuck's sakes, that is really fucking people. And it's been my theory. We're starting to see the statistics on it. Especially clarity. That one's weird. That's not necessarily an emotion, but just taking a trade when you have no fucking idea what the market is doing. That one seems to be the real big fuck you to most traders, is taking a trade out of clarity. And typically when you do that, that is impulsive. So here's the thing. Most traders are not finding proven statistics on their trades because they're not gathering data on their trades. I think a trade not tagged is wasted data. Because then you're just guessing what the fuck works and what doesn't. Based off what? Your P&L? I'll tell you this, you can't remember shit what you think is working and what doesn't. Most traders aren't doing that. They're not tagging or getting actual hard statistics on very specific trades. So they're guessing. So I think the traders who say that shit are just saying shit. And how the fuck can you have good solid edge? How can you develop it if you're constantly having a psychological issue? And I can tell you that most traders, because I go through a lot of Reddit day trading, and there's a real big difference between you guys and what's going on over there. They have no fucking idea what trading is. I think most traders do not understand what the fuck trading is. Okay? P&L is a shitty metric for improving. It has to be something specific to you. It's psychology, and most traders, at some point, they get aware that they're the problem, but that's usually like years down the line. Maybe it's a year down the line. Some of them figure it out a little quicker, but time and time again, it usually takes new traders some time before they start to realize that they're getting in their own way. I know there's people in this chat, and I've talked to a lot of traders where they're like, I know how to trade, but if I just stop doing this thing, I would be fine. I hear that so much, and it happened to me too. But the thing is, so many traders are unaware, and then when they're aware, all the price action patterns are also creating emotional patterns. For chronic, when it spikes down, gotta go long. Another trader maybe when it spikes down, it's breaking out, I gotta go short. Over the monster years of trading, they've trained themselves to associate that spike with impulsivity, with just needing to do it. Or if your P&L is red on the first trade of the day, Instead of keeping your shit together, you want to revenge trade the P&L. So you are training your brain to fucking revenge trade. So P&L and price action patterns, you're training your brain emotionally to do FOMO, tilt, or a lack of patience. Oh, I don't understand what's going on in the market. It's been 30 minutes. I need to put a fucking trade on. And the thing is, humans are good at this. They're good at, well, first and foremost, loss hurts 2 to 3 times more than a win. Because as humans, from an evolutionary perspective, we're designed to be risk adverse. So when you get fucked up in the markets, you hurt more. When, let's say you have a fucking wife or a girlfriend and you just didn't give her the time of day, and then she leaves you, and then all of a sudden you want her back. Humans fight harder after loss because it just burns more. And in trading, you're going to fucking lose. So what do I say about that is, like, most traders aren't even fucking aware. And the moment you put on that first trade as a new trader and you feel really good because it worked, excitement is also bad. Okay? Because the higher your excitement, that's like a pendulum. The further it'll swing to you getting pissed off. You're going to feel emotions, but you want to keep it as centered as possible when you're trading. Congratulations, you got a big trade. The moment you're getting stoked and happy about it, then you're going to start to try to preserve your P&L. Then you're going to be like real hesitant to actually trade because you're like, I'm up so much. I don't want to fucking, you know what I mean? And then you get in your fucking head. So my thing is, how can you possibly develop any fucking form of edge if you're always fucking it up, but you're not aware that you're doing that? It's going to take time. And most traders aren't aware. And then, again, with stress, there have been times where you've all been stressed out over something. Where you get stressed out, you're freaking out, you're in your head, and then it never happened. But you visualized it happening. You thought it would happen, whatever it was. Maybe I'm going to get fired from my job. I'm going in the office. I know they're going to have a talk with me. They said they need to have a talk with me. Fuck. And you see yourself getting fired, and you walk in, and they just wanted to know if you fucking sent a certain email or some shit. And you're like, oh, that's it? But you felt those emotions. You felt the stress. But what humans are not good at is doing the opposite. Looking at your book of charts, looking at your recordings, and visualizing and pretending you are calm and patient and just training yourself out of it. We don't do that because we live in a society where it's always negative. Negative titles in YouTube videos work really good. Negative headlines work really good. The Facebook Analytica thing where they showed people good shit and bad shit and realized people respond more to bad shit than good shit. We're not programmed to do, we're not being programmed to do the right thing. We naturally do the wrong things. And we are naturally risk adverse. So when you're hurting, you're trying to be risk adverse. You're trying to fix the loss. And then when you're getting out of your head, you can't focus. You can't make good decisions. The impulse control is not there, scientifically speaking, because the blood is flowing away and you're going in a fight or flight mode in a trade. So how can you get any idea of edge? Sure, you can backtest the fucking shit, but you're not going to execute it well. You're going to freak out because there's something about backtesting that you're not going to get from the hard right edge. So, yeah, there you go. Putting your lessons to work, M2 and M5. Side gig, training to be trading psych. Do you use OR in your stats? What is OR? Open range breakouts? No. Ego gets in the way. Got to go to sleep. Will there be a VOD of this? Yeah, it'll be in the live tab. It's going to go away, but it'll come back live probably tomorrow. I feel like the more you get clarity, you don't even choose what setup you want to trade. You just trade what you see. Yeah, that's actually what's kind of weird, man. It's as I'm looking at more and more statistics, I'm like, man, kind of tracking these setups really doesn't fucking matter because like every day it's like switching. Sometimes there'll be a range. Sometimes we'll have a channel and they break down, and then the channel goes up and it breaks down, and like they keep doing that. And then other days they start alternating, and then other days they're all going up. I think the clearer you are, the better the story you have, the more time frames you're putting into your decision making. And you could just explain, you could just lecture why this trade is good. Those are the best trades for me. And then when I heard a trader who's been trading for 40 years, not on this channel, but there was one of my friends' dads did ARB trading through banks, and he said since like 86, the best traders had the best stories. And there's just something, obviously you have a sixth sense about it at some point. So I think clarity is the big one. Loss aversion. What the yes, I've been doing live. There's a lot of lives, my friend. What's up? What's up? Yeah, there's some. I would say that a lot of the trades are being, for me, there's a feel to it. Chronic's starting to feel it too, which is one of the prop traders. Let's see if the guys in the Discord have asked questions. If not, there have been too. I think GSR will be good too. I bought one. Yeah, so we're gonna be tracking with EEG stuff at some point in the future to see why not. I think it would be kind of interesting to see if you guys, you don't get locked out, but I think it would be interesting to have a form of technology that when your brainwaves are not at an ideal state, if we can even figure out what that is. It might change from trader to trader, but like you can't trade until you're like actually like good to go. But we'll see how that goes. So we're trying to see where the brainwaves go. I'm trying to gather statistics. I'm trying to gather statistics on other traders. I'm trying to get other people to successfully trade. That's why I'm trying to do a prop firm, not a combine, but an actual prop firm. Because I sit there with these guys, one guy all day, damn day long. And now there will be two of them, and hopefully that competition will keep them in check a little bit. And gathering statistics so I can show you guys, hey, this is what it really is. Because, like, you know, a lot of people talk about, yeah, you should journal, but I don't think that's good enough. I think we're starting to see some very interesting shit. Because we know a lot of traders fail at this. We know it's a high failure rate industry, but why? Nobody hasn't really explained, statistically speaking, why that is. And we're starting to get a peek at it. And as I have more prop traders, I'm going to have a feature on the journal where I combine all their tags, and we can see like the common tags, the psychology tags, because they're supposed to take the exact same tags as me as far as psychology and emotions go, in clarity. We're going to combine those to see if there's an overall trend and shit amongst them. But so far, we're starting to see that is really fucking traders. And now they have the ability to filter that shit out. The problem is, how honest are they being when they tag that shit? Are they really clear, or were they confused? So it takes a level of awareness and honesty with yourself to make the right Tagging decision. Let's see. The sixth sense is interesting. I think it's something to do with incremental, with inducement and markets and experience of price action. Also, you got to understand, and I have a video on why trading courses suck. I think you're exposed to so much shit that, like, I think there's all these, like, subconscious patterns and the order flow and the price action that you're not aware of, but it's so ingrained into you. I don't know. It's like somebody who's been abused. You know, you raise your hand, you move real fast, and they go like this. But they're not even thinking back to that point. They're just reacting, right? Just like I think new traders are not aware of how their psychology is programming them through patterns and shit. They can't handle 2 losses in a row. They can handle 1, but not 2. But they're not aware of it. So I think when it comes to seeing order flow and the patterns, there's so much information that's so deeply enrooted in you that you're not even aware of it, that you're kind of just trading based off of what you would consider a sixth sense. And it's really interesting because as I continue to go down this journey, there's a lot of self-discovery. There's a lot of learning about myself in the realm of trading, and it's like, oh shit, I do this because of this? Or I remember when I used to do this all the time and I never realized I was doing that. I think the same thing's happening in price action. It's doing these things that are just deeply ingrained into your brain. So when you're taking a good trade, you could be like, well, it's a good trade because of this, this, and this. But maybe there's a lot more going on that you're not aware of. So that's probably where that sixth sense thing is coming from. People are arrogant and refuse to change or notice their pitfalls. Yeah, and this is an athletic sport, I think, and I think it's easy. People think it's easy money. Come on, let's all face it. That's what I thought. Oh, I'm lazy. I can click a few buttons and have the ability to potentially make millions. Then reality sets in. So I think most people are looking for easy money that get into it. Then they don't realize what it is. And then I think the information you guys consume on the internet is so fractured. Because there's a myth. You can find everything on the internet for free. Yeah, sure. But it's like I take a 10,000 piece puzzle, like a jigsaw puzzle, and I just dump it on the floor. You're going to have to pick through that and figure out which pieces go together. And then, like, the information is always conflicting as shit. One guy says this, the other guy says this book says this, that book says that. So that doesn't fucking help. So I think this is a really, I don't know, the only real thing we kind of got is like S&B Capital. I mean, if they're truly raising the traders, and I've actually know 2 interns that have worked for them and Kirshner, their sister firm, and they watch the shit firsthand. I think the only glimpse we have into traders being successful shouldn't be based off an individual. It should be based off of like S&B Capitals. These are what our traders are doing. Okay, well, there's something here, and I'm trying to do the same thing with my guys. So maybe there is a way, a process to do this. And I think and also the information, when I first started consuming trading content, it was technical. It has become totally saturated with flash editing and influencers, and it's not the same landscape it once was. It went from technical nerds who wanted to know really techie shit to like this flashy crap. Because when I first started trading, there were no Lambo videos. That shit did not fucking exist. And if it did, it was not the majority. So I think the whole industry is all fucking skewed, and it's like a big piece of puzzle. That's all. Which pieces go with what? You know what I mean? Tagging and drilling is a ton of work after after a shitty. What pushes you to record the day? I have to lead by example. I did get complacent, and also the journal is designed, at least our journal is designed to be as quick as possible, because when I used to hashtag shit, you used to have to hashtag in journal ticks. You got to hashtag manually the tags. Then I put them on a hotkey. But like now, like for instance, I can click on it and it takes me right to the video of the trade. No longer do I need to like sift through a fucking YouTube video. So we're designing it to be as easy as possible, which helps. To be as quick as possible. But I have to lead by example. So I was complacent and I would only review bad days. I used to review all the days, but then I got complacent. Reviewed only bad days. Sure, I could trade. I think my trading is going to a whole nother level now that I'm consistently doing it. But I got to lead by example, so I have accountability, which are the other guys. I think accountability goes a long way in trading. It's hard to organize and get people to do it, but I watch other traders, and I'm cherry-picking the guys that don't tell me they want to do it, but the guys that are actually doing the work. And as we're getting grouped together, the top people you hang out with is who you become. I'm cherry-picking the guys that I know do the work, bringing them all together, and hopefully it creates a competitive environment, because I want to outwork them. And they're listening. I want to outwork them. I need to lead by example. So that's what's driving me personally. And it's like NBA, the basketball. If you look up YouTube videos on a lot of NBA players, there's a lot of them that do not want to practice, that refuse to practice. They just want the fame and glory that comes with being an NBA player. And there's other players talking about it. It takes true passion to be able to do the actual work. And everybody wants to be a trader until they have to do trader work. It is, it's not pretty, but that's what it takes, man. It's really the hardest, easiest money you could ever make. It is difficult. And it just has to be done. I have to review today. And what I do is if I didn't review 2 days, I don't trade the third day until I reviewed my 2 days. Otherwise, it'll get out of control. That is my rule if I don't do it. And I have a lot of people I hold myself accountable for, like the coffee subscription and shit. I got to get them content. I got to fucking work with these traders. I need to get my statistics, because now I'm like obsessed with knowing what tags do what. So yeah. What are my thoughts on Forex? I don't know. Yeah, everybody wants to be a trader until they have to do trader work. I mean, look at NBA players that aren't doing the work. The best players, the best athletes, man, the shit they fucking do. When you realize it, you're like, God damn. And I'm like naturally a person, because we went over MOs and shit. Like, I have fucking piss poor follow through. Basically, I can't finish a task for shit. I know I need to do the task, but not doing it in a very, like I reviewed Monday's session today, for example. As long as it's getting done. It's kind of not in a routine schedule. So if you find it hard to stick to a routine, you have shitty follow through like me, doing it the moment I feel the urge to do it. Like, for example, I wanted to make a YouTube video for the last few weeks. I'm only doing live streams now. So I don't know, dude. I'm holding myself accountable. I got a lot of riding on my shoulders, and I think working with other people and having accountability just pushes me harder. Trading by yourself is like trying to start and run your own fucking business. Most people can't do it. Most people aren't self-starters. Whereas if you go work a job, you're more likely to do the job because you're being held accountable. For me, having some form of accountability is a driving force. And the weight of the world is being stacked on my shoulders because, like, I can't fail. I got to get other guys consistent. Like, I have to keep trying, which is a real driving force for me. If it wasn't other traders, I wouldn't not like this industry. If I did this by myself, I would fucking hate it. I like team sports. I like being part of a group of people and putting that together and trying to show you guys why I think traders fail through statistics and trying to get these guys good. That's a lot of accountability to do the work. So that's kind of where it is. What's up, dude? You just came in right as I'm leaving. I am done with this stream. It'll be up probably tomorrow. It's a long one. I'll see you guys later because I'm going to piss my